All right, what is up, traders? What's up, tycoons? Super excited for today's video. Now, today's video is going to be pretty much the most effective day trading strategy that I've really found. And the reason it's so effective is because you can use this strategy day in and day out, and it presents you with opportunities. Now, sometimes the opportunities are very clear, okay, and sometimes they're not as clear. So you don't have to trade every single day just because the strategy gives you a setup, but we're going to go over how these can give you high quality setups and you can define your risk by doing so. Okay, it's going to be a really great video, so be sure to smash that like button, subscribe to the channel if you guys are new. Basically, we're going to start off for the opening range strategy by establishing our opening range highs and lows. So the high is going to be the green line, the low is going to be the red line. And then what I like to do is I like to also include the previous day highs and lows. So not the previous day opening range, but the highest price of the previous day and the lowest price of the previous day. Oftentimes, these can be good targets if you are scalping the specific stock or equity that you are trading. Okay, and then I like to add on the previous day opening range. So you can see how it gets a little bit more developed, right? So here's the, current day opening range. Then we have the previous day highs and lows. And now we've got the current day opening range, the previous day highs and lows right here. And then we've also got the previous day opening range. Now, what is the opening range, you may be asking? All right, I'll explain that to you guys in a little bit. We're going to break down all of that in today's video, and then go over some other scripts here and indicators and how when you combine all of these things together, it really gives you a good idea of direction, possible entries, as well as possible exits. Okay, so we'll be sure to break down all of that in today's video. As always, though, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the disclaimer. And if you want, you guys can join the Investment Intelligence Discord. This is how I get these really high percentage return trades on things like the S&P 500 is by trading that opening range. And every single indicator and drawing that you saw on the charts right there is a custom script that I have available to all of the Discord members. So it's really great, especially for beginners, because now you don't have to do the hard work of charting. Maybe you're not great at charting. These scripts and these indicators will do it automatically for you. Okay, now not only do we day trade, but you can get access to all of the different analysis and trade ideas for the different stocks. You can swing trade. You can see this is a screenshot from today's profits of the different plays that I'm in. And it's looking very, very good, right? Of course, nothing's ever going to be all green. There's a couple losers in there, but the winners greatly outweigh the losers. Right now, if you don't want to sign up for the Discord, it's only $10 a month. I do have a completely free newsletter for you guys, giving out free valuable content, free trade ideas. You can get those directly to your inbox, going over the conditions that we're looking at on the chart, showing you guys the chart. And many of these trade ideas have worked out very, very well. Okay, I'm not spamming you guys with 10 different stocks every single day. No, what we're doing is just looking for high quality setups. Okay, and I try to sprinkle in 1 to 2 free trade ideas a week in that newsletter. Okay, here is an example of one with a rising wedge, highlighting the different levels and targets that we're looking for, where it can come down to. And you can see that that trade played out very, very nicely. So if you're fans of free valuable content and free trade ideas, you're definitely going to want to sign up for that newsletter. Now, let's get into the video and talk about this opening range strategy, as this chart may look a little bit intimidating to the beginner. So as we mentioned, we want to start off here with the opening range highs and lows. And so what is the opening range, right? Well, there's many different ways that people can define it. Okay, but typically it tends to be the first 30 minutes of the market open. So, this area right here is right when the market opens. These are 5-minute candlesticks. And, you can see that each one of these will represent 5 minutes. And so if you look, I actually use the first 15 minutes of the market. So that's just my personal preference. Again, you can use the first 15 minutes or the first 30 minutes to establish your opening range. And the opening range is going to be the highest price within that first 15 minutes and the lowest price within that first 15 minutes. And you can see with this custom script and indicator that I've got, not only does it chart it automatically for you on the next candlestick after those first 5 minutes right here, so that would be 15 minutes, it also charts it up here and puts it as a value and labels it in a box for you guys as well, so you can also read it, right? So this is why I love Thinkorswim, because it's really great to be able to come up with think scripts to do a lot of the hard work for you. And if you're a beginner, and as we mentioned, maybe you're not so good at charting, or maybe you just feel like you wouldn't be quick enough or fast enough, this does a lot of the hard work for you. Okay. Now, typically what you would do when trading the opening range is you want to look for breaks to the upside or breaks to the downside, right? And so you can buy the initial break of the opening range, okay? And that's a little bit more of a risky setup, but you can buy once we get above there and have a stop loss shortly below that opening range high. Or oftentimes what I really look for is a breakout and a retest, which is exactly what we got here, right? So we see we have our opening range established. We open up above it, and then we come back, and this candlestick closes right above the opening range. And so that is a very clean and textbook breakout retest. And at this moment, once I saw this candle close here, I actually entered into a long position, and you can see the next 5-minute candlestick was a large green candle, okay? And so, especially if you trade something like options, all right, and you're trading weekly options or 0 DTE options, you can get immensely great returns in a very quick amount of time using a strategy like this. Now, of course, options trading is very, very risky, and there's lots of risk to be associated with that. But, specifically, I really like to use this strategy for scalping. Okay, and so scalping is typically very quick day trades. And what you can do is you can take those profits on those day trades and maybe just leave a small portion of that position open, and then see how far up it can go, and have a stop loss at break even or slightly above break even. So that's one way to trade the opening range. And that's in going long. You could do the same exact thing if it's going down, right? Break, retest, push lower. Then you could look at shorting the market right here, or shorting whatever stock it is that you're looking at. I particularly tend to only use this strategy and really only day trade the SPY, QQQ, and things like SPX and stuff like that. I try to focus on the indices because those have contracts that expire every single day. All right, so that's one way. Really two ways that we went over, right? The initial break, you can try to catch the move to the upside. That's number one. Number two, you can look for the break, retest, push higher, or break, retest, push lower. And number three is the opening range often acts as support and resistance as well. So if you see here, we come down, right? And we have this little bit of this failure of the opening range highs. And what do? Well, we tag the opening range lows, guys. Look, that is the opening range low. And that's exactly where we find support at. And this is what I mean by now. So you enter here because you're looking for a test of the opening range lows. And oftentimes I'll look to take profit at the opening range highs. Okay. And you can see here that we actually just explode up through there. And at this point, you can take profit at the initial, break of the opening range high, because that was your initial scalp target. And now you can use some other instruments to set further price targets and also determine whether or not you should still be in the play and just let the winner keep winning. Okay. That's one of the big mistakes that people have, is they don't necessarily let their runners run. And they just sell their winners too quick, but are very easily going to hold on to a loser for way too long. That's a psychological mistake that many traders have. Now, how do you know some price targets to potentially sell at, right? Let's say you're breaking out of that opening range, as we did here, breakout, retest. Here, I took profit as soon as we got above this opening range high. Okay, for me, it was a scalp trade position. And I wasn't looking to be in stuff for too long, because today Jerome Powell was actually talking. And I figured it'd be a little bit choppy until Jerome Powell starts speaking, right? So here, what we've added is the previous day highs and lows. So the solid body green line right here is going to be the previous day high, and then the previous day low is actually going to be a solid body red candlestick. And again, with this custom script and indicator, not only does it chart the price level for you, but it also adds it up here, right? P stands for previous, LOD stands for low of day, P stands for previous, HOD high of day, right? And so now I know that, hey, well, I've got a scalp target to the upside. And if we come up here, I can take profit on my play, or I can trim some of it and set a tight stop loss just in case things reverse, right? So, this is really just adding to the whole opening range trading strategy, okay, and developing it further and further. And then another thing is going to be your previous day opening range. Now, you can use this a couple ways. One way to use this, right, is to gauge current market sentiment, right? And so you can also do that with the previous day highs and lows. But the way that this script is going to do it, right, it's going to give you the previous day opening range low, the previous day opening range high, and it charts it as a blue dotted line, right? So you have the opening range in the dashed line, you have the previous day highs and lows here in the solid lines, and then you have the previous day opening range in the dotted lines. And so, being that we can see we established an opening range above yesterday's lows and yesterday's opening range, we can see that we have a little bit more of a bullish tone in the market, right? And, once we get above yesterday's highs, and you can see we break out, retest yesterday's highs, then we know that bulls are really in control just based off price action alone, not using Vwap, not you taking a look at the internals or anything, just by simply understanding that, hey, we're above yesterday's lows, we're above yesterday's opening range, we're above today's opening range, and we're above yesterday's highs. So we know that bulls are completely in control up at these levels. And you can see the market really chopped until we got above yesterday's opening or yesterday's highs. And that's when we continue to have a stronger push to the upside. So you can use it to gauge sentiment. It can also be an area, again, of support and resistance. So in this case, we were trading above. And once we come down to this area, this is an area where we can define our risk pretty well by saying, hey, we're going to enter within yesterday's opening range. And in this case, we would be looking for a long potentially. And we're going to see if we can set a tight stop loss below, or maybe a stop loss at yesterday's lows or below yesterday's lows, and look to catch some upside movement potentially here. Okay, so that's the two ways that you want to add the previous day opening range and use the previous day's opening range. All right, and here, now we know what all of these lines are on the chart. Okay, so that's not too complicated. And all we've done now is we've added the VWAP. So that's going to be in purple. This is going to be your volume weighted average price. As you're above the volume weighted average price, that's more bullish. As you're below the volume weighted average price, that's more bearish. All right. And you can see today, we really only had, maybe 3 or 4 candlesticks that closed below. Now, that's another key thing to learn about trading, whether it's day trading or swing trading, is it's all about where the candlestick actually closes at, right? So this candlestick went far below the purple VWAP here, but look at where it closed. It opened here, came all the way down, and then it actually closed above that VWAP. Same thing here. We opened here, went down below the VWAP, but then buyers seem to be stepping in around that VWAP and keeping the volume weighted average price, keeping price above the volume weighted average price, all right, which is going to be bullish. And then we've also got the market internals up here added to the scripts. So we have VOLD. This is going to be your volume up down. You have the ADD, the advanced declines, and then we've got the tick right here in the put call ratio for the S&P 500. So the way you can use these is if you see VOLD and AD are green, that's typically meaning that you're seeing more stocks, advancing than declining, and you're seeing more stocks with volume up than down. Okay, so that's generally more bullish, right? And so this helps you peel back and kind of look into the market a little bit. Okay, now this video is not entirely dedicated to internals, but this is something that I like to look at and help gauge me, right? If I'm seeing that, VOLD, AD, and tick are all red, I may not be looking to go long right here, even though we're, above the opening range. That's a point, and that's an inference clue that, hey, even though we're retesting right here, the market internals are showing that more stocks are declining than advancing, and more stocks have down volume than up volume, basically, right? And so you would say, hey, well, the internals, even though we're retesting right here, internals don't necessarily look good. We could come down and try to test the opening range lows, right? And so that's kind of why we add the internals in here. And then we've also got the EMA clouds. And so, when the EMA clouds flip green, that's typically more of a bullish sign. And what I really look for is the EMAs trading, the EMA clouds, which are going to be these right here, trading above the VWAP. And once that is the case, you can use this to determine whether or not you should stay in your position. Okay. So what I mean by that is take a look. If let's say we entered here on the retest of today's opening range low. Okay. And then we came up and we blew past the opening range high of the day. Well, now we see that our EMA clouds here are actually trading above the VWAP right now. And so what we're going to do is we're going to wait for a candlestick to either close at the bottom of the candle or break through the candles. And once that happens, it's very likely that it's going to, gravitate lower towards the VWAP. And so you can use these as kind of a mental stop loss, right? And say, hey, well, once we break through here, maybe the uptrend is going to be over, or maybe we're going to get a pullback. But if you see here, we're really just bouncing off the clouds each time as support, right? We keep, we pop up, we bounce back down to the clouds, we pop up, bounce back down to the clouds, pop up, bounce back down to the clouds, and then pop up again. And so this kind of lets you know that, hey, when we combine everything together and we say we're above yesterday's lows, yesterday's opening range, we're above today's opening range, and we're above yesterday's highs, and we have positive EMA clouds, and we know that tick, add, vold, all three of the internals are green right now, that is basically a green light for us to say, hey, I can let my runner run right here. I don't have to worry too much about a quick reversal. Of course, anything can happen, but for right now, all signs are that things are bullish and things are going to continue progressing up higher. Okay, now trading on different time frames can be very tricky. I really like to focus on the 5-minute time frame. I know some people really like to focus on the 1-minute time frame. To me, that's just a little bit too small. I also use the 15-minute time frame a lot as well, and some people really like to focus on the 15, 30, or 1-hour time frames. At the end of the day, it's all about what works for you. But for me, through the years of trial and error and figuring out what works and what doesn't work, this strategy and basically all of these different indicators put together, okay, have been what works best for me personally. And hopefully this video is helping you guys on your journey to discover trades that work for yourself. You don't have to implement every single strategy that we talked about in this video, but you do want to try and take notes and consider some of the things that you hadn't thought of before, or some of the things that work for you and that you're comfortable with out of this strategy. Now remember, for all the members of the Discord, every single one of these scripts and indicators that charts all of this stuff up for you is available to all of the Discord members. So what that means that if you were to join the Discord, your chart would look exactly like this right now. Every single thing you see on the screen would be there. And now that you guys know how I use this strategy, you guys can look at, practicing, maybe paper trading for a little bit using this strategy, and then eventually stepping up to using some real money and potentially scaling up from there, right? With this strategy and trading SPY, for instance, you can buy contracts that are $100 or less. And so this is a very scalable thing. And this is something that I'm doing in the Discord to show people that, hey, you can scale a small account. And even if you only have $100 or $1,000, right, you can actually start to scale up that account using this strategy and find multiple trades every single week. Today presented us with 2 really great trade opportunities, and that's just one day. Okay, sometimes it's not as clear, and sometimes you really just chop within the opening range. Sometimes you just completely blow past them and you feel like you never had a chance to get into the play. So it's not something that's going to just magically change your life, but it is something that has drastically changed my rate of success when it comes to day trading. Oftentimes, 1 week you're looking at this strategy and that one didn't work, so you start another strategy and that one works good for a month or 2, and then you have a bad week with that one, and so now you say, I got to change it up. With this, you can do this consistently year round. It doesn't matter if the market's green, if the market's red. You will be able to, consistently find opportunities, and it's all about execution and really the psychology of trading. That's going to be the hard part for you. All right. Now, you also want to combine this with the market pulse. Okay. Doing this will give you even more of an edge. And you want to have a pulse on the market by looking at things such as the dollar, the Dixie index, the TNX, the treasury yields, as well as oil prices. Okay. especially if you're trading something like the SPY. You know, a lot of these tend to have inverse relationships with the market. So not only can you add to the arsenal of, you know, weapons that you have with all of these scripts and with this strategy here. But let's say you start to see the Dixie start to drop down and you start to see 10-year treasury yields start to drop down. That's going to be, you know, more of a bullish scenario for the market and help give you a pulse on what could happen in the market. So I have a really great video that you guys should watch on the market pulse. It's very great and it explains how to use all of these. I use the opening range strategy, and then I also use market internals. Now, we briefly touched on the Volt, add, and tick, but I have another chart layout that I constantly monitor to really help give me the ultimate edge that I need when it comes to trading. And using all three of these things together, the opening range strategy, the market pulse, and the market internals, you know, is a way that I've found to become consistently profitable when it comes to day trading in the stock market. All right. So basically what it would look like is you've got your opening range strategy right here, and you're using the market pulse. And what do we see? Well, we see the TNX often has an inverse relationship. And at 10 a.m. right here, which is also 10 a.m. right over here, you can see that the TNX has a huge crash to the downside. Well, what do you see? The SPY has that huge crash to the upside. And at the time, I was actively monitoring the dollar, looking for a break of this trend line to see when we got that break and retest. So remember I said, hey, when we came here and I saw that we closed right at the top of this opening range, I also knew that the internals looked good. So you do want to watch that video on the market internals that I have for you guys. But I also saw that the Dixie could break down right here. And sure enough, it absolutely capitulated right here at about, you know, the best candle I could have wished for. And so I went ahead and took those quick profits because I knew that this was an exaggerated move in the dollar and that the dollar could snap back a little bit, as well as an exaggerated move in the 10-year treasury yield and that the 10-year treasury yield could snap back. And so all of that together prevented me from letting this winner right here come around and turn to a loser and selling down here or selling below the opening range highs. Okay. And then of course we had the next entry over here once we came down and tagged the opening range lows. So this is a visual basically of how you use the market pulse along with the opening range strategy. Now, remember, I've talked about the Discord a lot. That's where you guys can, you know, basically see me giving, you know, intraday commentary and updates on these type of events. You know, all of those charts today I posted in the Discord for the members saying, hey, this is what I'm looking at right now. You also get access to all of the different swing trades that I'm looking at through the analysis and different trade ideas, right? So if you don't want to pay for the Discord, it's only $10 a month. So that's literally less than a cup of coffee a week. Just sign up for the Investment Intelligence Discord, guys, okay? You know, it's completely free, and I put out free valuable finance content, free trade ideas, you know, and free trading content in that newsletter, and you can get those to your inbox every single week by signing up. And if you feel like today's video was good, but there's maybe some more questions that you have, or you feel like you ever want a one-on-one personal session with me, just head on over to my Ko-Fi page using the link in the description and click on the commissions tab. That's where I book all of my coaching sessions. All right, I do 30-minute and 1-hour sessions. You know, you can book those directly through there. All right. You can also request a YouTube video on the topic of your choice on the Ko-Fi page. I do that so it doesn't get lost in the comment section. And you can also click on this buy a coffee button. It's basically a way to leave a tip or donation for all the free valuable content that I put out for you guys, whether it's on YouTube or in the newsletter. And with that being said, I really appreciate y'all watching the video. Smash that like button and subscribe to the channel for more.